Hello and welcome to Property, Plant, and Equipment, Part 4. My disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2020 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So we're now going to move into our last method that we're covering in this presentation, which is double declining balance. So for double declining balance depreciation, we're going back to that very first slide, and I would look at that in terms of the theory, but on a higher level, we're taking more depreciation earlier because the maintenance costs of the asset are much higher in later periods, okay? Just think about any type of German luxury motor vehicle and you'll get the photo. I guess you'll get the picture. Okay, so the way that we're gonna be doing this here and how we go through and calculate double declining balance is we're gonna take our acquisition cost less the accumulated depreciation, or the total amount of depreciation that was taken to date, divided by the estimated useful life, and we're going to multiply that by 2. And this will give us our annual depreciation expense under double declining balance. We want to remind ourselves that for double declining balance, we are going to be taking into account for partial periods because double declining balance is a function of time. Also too here, if you notice in the equation, we do not take into account any salvage value. Salvage value is taken into account under both straight line and under units of production. However, here we are not taking into account salvage value. Therefore, we have to be very, very careful that our net book value, or our property, plant, and equipment, less our accumulated depreciation on equipment, which is going to be giving me my net book value, always is greater than salvage value. And I can never depreciate below salvage value. Okay, so we're back over here to our favorite example of Sahar's mom's class call, who purchased equipment on April 1st, 2018 for $400,000. The equipment cost $80,000 to install, and shipping the equipment to the facility was $20,000. The equipment is expected to last for 5 years and has a salvage value of $200,000. Assuming that Sahar's mom's class call uses double declining balance to depreciate the equipment, determine the depreciation expense for the years ended December 31st, 2019 and December 31st, 2020. So what we're being asked to do here today is we're going through and we're going to be determining the depreciation expense using double declining balance. So my formula for double declining balance right over here is going to be my acquisition cost, which is $500,000, minus the accumulated depreciation, which will depend on the part of what I'm doing. I'm going to be dividing this by my estimated useful life, and I'm going to be multiplying this result by 2. Okay, so as I look at this question right over here, okay, so my acquisition cost, let's do this first for 2018. The reason, if it's asking us for 2019 and 2020, if I was doing straight line, I could just compute it and I would get the full value for 2019 and 2020. Because this is double declining balance is a function of the amount of depreciation that I have taken previously. Therefore, I need to compute depreciation for every year that I own the asset. So here, this is going to be 500,000 minus 0, because when I initially acquire the asset, it has 0 accumulated depreciation. I'm dividing this by my estimated useful life of 5 years, and I am then multiplying this result by 2. So this is going to be giving me 100,000, which is the 500,000 divided by 5 times 2, or my total 200,000 total annual depreciation expense using double declining balance. Okay. So by the way, if you do not understand where this acquisition cost comes from, please watch part 1 or part 2 or 3 of the video. Okay. However, when I'm in 2018, this is for a full year. So for 2018 though, I only used the asset for 9 months. How did I get 9? April, May, June, July, August, September, October, November, December, for 9 months. So what I need to do, so for 2018, this is going to be 200,000 times 9/12, or April 1st through December 31st, which is going to give me $150,000. So I'm going to be taking in the first year $150,000 worth of depreciation. So we have to always keep in mind is that I can never depreciate beyond salvage value. So we need to make a little chart, and this is kind of the chart that I like to create for these different types of questions. I'm going to start over here with 2018. My acquisition cost is $500,000. Okay. My depreciation expense that I'm taking during 2018 is going to be $150,000. And for some reason, it's because I wrote it out like this. So my acquisition cost is $500,000. My depreciation expense for the year is going to be $150,000. My accumulated depreciation, okay, meaning the total amount that I've taken to date, is 0, because it started at a balance at 0 as of 4/1/18, because this is the first year I've owned the asset, plus what I've taken in the current year, or $150,000. My net book value is going to be my acquisition cost minus my accumulated depreciation, or $350,000. I'm going to compare this value here to my salvage value. And let's just write this here. Okay, and then my salvage value here is $200,000. So I'm okay, at least for right now, because my net book value is greater than my salvage value. So I can continue to depreciate the equipment. Let's go ahead over here to 2019. Okay. Acquisition cost here is $500,000. However, my accumulated depreciation through as of the beginning of 2019 is going to be $150,000. I'm dividing this by 5 years. I am then multiplying this result by 2, which is going to be giving me a total result here of $350,000 divided by 5, or $70,000 times 2, or $140,000 depreciation expense for 2019. Notice I do not need to multiply this by 9/12, I'm really multiplying it by 12/12 because I used it for the full year. Okay, so for 2019, let's go through and do the chart. I have my acquisition cost of $500,000. My depreciation expense for 2019 was $140,000. What does that mean? It means that my accumulated depreciation is going to be $150,000, which it was over here from the prior period, plus the $140,000 now, or $290,000. My net book value is going to be $210,000, and over here I got my salvage value of $200,000. So I can continue to depreciate the asset more. However, I'm going to be somewhat limited. So let's go over here to 2020. So here for 2020, I have $500,000 minus $290,000, because that is the amount of my accumulated depreciation. Where did the $290 come from? Well, in 2018, I depreciated it by $150. 2019 is $140. So my total accumulated depreciation is $290,000. I divide this by 5 years. I'm going to be multiplying this result by 2, which here is going to be giving me 84,000, or 210,000 divided by 5 times 2. 210,000 divided by 5 is going to be $42,000. 42,000 times 2 is going to be 840,000. So I mean, $84,000. Okay. So 2020, here acquisition cost. I initially going to be recording, if I was just to do this anyways, over here at 84. My accumulated depreciation is my prior beginning balance plus what I did this year, or 84,000. So my total balance here is 374. My net book value is at 126,000. I have a problem because my net book value is less than my salvage value. So what I need to do here in this scenario is that I have to not depreciate this over here by 84,000, right? Over here, the net book value is less than the salvage value. So I'm going to need to, we would call force, or need to manually calculate depreciation so that the net book value is going to be equal to the salvage value. How do I go through and do that? Well, my acquisition cost here was 500,000. How much depreciation expense do I take? What I would do here is I would look in the prior period, or 2019 net book value of 210,000 minus the salvage value of 200,000. Gives me 10,000 depreciation for 2020. So over here, I'm going to take 10,000. When I use 10,000, my accumulated depreciation is now 290,000 plus 10,000, or 300,000. My net book value is now 200,000, which is equal to my salvage value. So if I ever run into a situation where my net book value is less than the salvage value, what I'm going to need to do is I'm going to need to manually calculate the depreciation so that my net book value is equal to my salvage value. Okay, so that's how we go through and calculate depreciation using double declining balance. So I want to thank you for watching. Please do not forget to like and subscribe. If you have any questions, please email me at 1812cpa@gmail.com. Have a great day and a pleasant tomorrow. Have a great one.